Hello everyone, welcome back to this week's FIRL Quick Dive. Now, what we're going to talk about, we're going to talk about the Malaysian Parliament, right? There's been some problems brewing lately and how it affects the KLCI. Secondly, we're going to talk about Bursa Malaysia itself. And also, we will be talking about the recent developments in China and how it's affecting their stock market and whether or not, China is still the place to invest.
Trying to figure out how to build your 6 to 7 figure stock portfolio. MJ and I had the privilege of training thousands of people before, and we share all those tips and tricks in our FIRL Masterclass. You can find the registration in the comment section below.
All right, John, let's start off with China. I think this is our first time we are covering something, outside the shores of Malaysia.
Yeah.
And recently, China stocks, right, has been hit really, really hard, right? You guys can Google the stock price. And specifically the Nasdaq Golden Dragon China. I don't know if you know this. This is the index that tracks the tech stocks that are listed on the Nasdaq. That is from China. So they've been hit really hard. Then recently there are certain regulations about the private tutoring or the education industry in China, where they have to register, these companies have to register as non-profit organization. So as you can imagine, that caused the stocks to tumble by a lot. I think like one of them actually fell like 80%, right, in like a week. So, John, what are your overall thoughts about this crackdown?
I think we have to understand China is really a top-down kind of political system where when they crack the whip, virtually it's very unlike the US system where there's a lot of lobbying that takes place. There's a lot of things that need to happen before US actually passes a legislation. China, once they have that legislation, right, it's really fast. It really trickles down very fast.
Absolutely.
Yeah, and I think it boils down to the policies or the objectives of what they want to achieve in somewhat equality. And I think you found a very interesting article by Ray Dalio. And,
in the next slide, yes, correct.
Yes, yeah. So I feel that observers of Chinese politics or investors of Chinese stocks, right, really do have to look into the political policies or objectives of what the Chinese government want to reach. I think that's more pertinent comparatively to if you were to invest in Europe or in Malaysia. Because their top-down policy really has teeth. Teeth in the sense that when they implement, they really implement. Whereas in other more capitalist structured countries, it is much more difficult. You can't just simply approve one particular rule that, changes everything. Whereas in China, that really happens really fast.
Yeah, I think let me try and explain, let's say, like both sides of the argument. So you've done a good description describing the structure and how it actually affects investments, right? So in the next, this is a pro tip. If you guys want to invest in Chinese stocks, you have to make sure that the company is pursuing policies that are in line with the central government's interests. So for example, I think in 2018, Tencent, the stock price fell a lot because the government banned children from playing games after 10 p.m. I don't know if you remember, John.
Yeah, I do.
Yeah. So things like that, right? So who knows? Maybe TikTok is next, right? Because it's such an addictive app, and there's like hundreds of millions of people in China using it under Douyin. So in relation to the education one, it's according to Ray Dalio, and according to the officials, is really to reduce educational inequality, meaning to say that how you describe it actually, John? Because how I understand it is that they cannot overcharge for educational content or services right now, all this, because these are now non-profit organizations. So how do you understand this?
I'll come from a perspective of my neighbors, ironically. So I stay in an area where there's a lot of expats in KL, and I actually bought my unit from a Korean airline pilot. And the reason why he actually had a unit here was because he wanted to send 2 of his daughters to one of the most famous international schools in KL. And I asked him, I said, why is I mean, for Malaysians, we consider it very expensive, but for the Koreans, it's very, very cheap. And it actually boils back to my upstairs neighbor and my side neighbors. Most of them are Chinese now. So you had Japanese, Koreans, and then now we see a much more Chinese.
Like Chinese, right?
Yeah, the Chinese. And the reason why they come here is because one is literally cheap. Because if you want to get to a top-notch school in China, you either have to be very, very smart,
yes,
or very, very rich. Sadly, it's just the two. And I had the privilege of, touring Europe in 2006, I think, 2007, sorry. And I bumped into 2 guys. One guy in Berlin, he was actually under the scholarship of the Public Utilities Board of Singapore, but he's Chinese.
Right.
And I asked him, I said, yeah. So I'm just trying to highlight the context. I said, he told me, and this is literally from his words, he said that I'm not smart enough to get into Tsinghua. That's why I'm in Hamburg University. So it's the opposite, like for us, if you can get into Harvard or Cambridge or everything, right? It's like a prestige. But for the Chinese, if you can get into Tsinghua, it's like the IIT or the IIT of India or MIT of the US. It's the opposite. It's so competitive in China that they have to come outside. And what I'm trying to portray is that the competition is so fierce there that in a way, financial, what do you call it? By them having a financial privilege, they can actually do much better for their family. And that's the inequality that I think the Chinese government wants to bridge,
Yeah.
I mean, that's how I see it. And I see that the middle class or the richer Chinese, they actually just go outside. Now the problem is the Chinese government wants to help those that are stuck inside the country and reduce that inequality gap. That's how I see it.
Yeah.
I mean, what are your thoughts, MJ?
For me, rich people will find a way.
Yeah.
Right? Rich people don't complain too much. They just leave.
Yeah.
So
that's right.
It's like taxation, right? In theory, if you increase your tax rate, you should get more taxes.
Yeah.
But guess what? If you increase it to a point, people just start leaving, or they open like offshore accounts, or all the things that that are not beneficial to the country. So I guess the next question is, how does this affect you as an investor if you're planning on investing in China? And for me, I've always believed that you should dip your feet into China to test things out, because on one hand, they have a lot of growth ahead of them, especially in the consumer technology sector. But it seems like the government is taking certain actions where essentially it makes foreign investors a bit jittery. They're looking at this and thinking, wow, is this really the Chinese economy freeing up, right? On one hand, the Chinese government likes to say that we want to free up the economy, we want to be more modernized and things like that. But then at the same time, it does not treat the capital markets with the kind of respect that it wants to be treated. And unfortunately, capital markets usually mean American and European investors.
Correct.
If we summarize it.
Yeah.
So for me is to really analyze the company, whether or not they are in line with the government policies. If they're in line, then I think you can make good investments in China. But I do agree, right? You see, the reason Tencent and Alibaba has grown so much, let's say the two, crown jewels of, or to use
China.
our friend's phrase, the golden goose, right?
Yeah.
And the argument is that the Chinese government won't kill the golden goose, so there's nothing to worry about. I disagree that slightly, in that you don't have to worry that they will get killed off, but you do have to worry that they may not be as innovative anymore. Part of the reason these two companies became so big is because the government largely left them alone, right? They were more concerned in regulating the real estate market, the banking industry, and all these things. And the minute Alibaba, Tencent start to hop into the financial payment space and things like that, and start to have a huge social effect on the entire country, then you're seeing certain problems. So what I'm trying to say is that the future is not going to be as good as the past. That does not mean that the outcome cannot be positive.
Yeah, I mean, look at what the Chinese government did to end financials.
Oh yeah.
Right, you're right at the eve of their listing, and these are the kind of things that I think the Chinese government has shown that they can bite. I think that is something that investors should be wary about. I think the other thing, MJ, to add on is actually the VIE, the variable interest entity
structure. Yes, the variable interest structure, yes.
Yeah, yes. And I think a lot of Chinese investors, foreign investors invested into Chinese capital markets should really understand the VIE structure, understand how it will actually impact I think the word that they use is the unenforceable contract structure that VIE presents itself.
Yeah.
And the only way I feel, in my personal opinion, to protect yourself is actually by your portfolio allocation again.
Yeah,
you rightly pointed out, China is just so, MJ, we both looked at data, and when we look at Chinese company data, right, growth of 25% year on year.
Yeah.
or revenue growth of 50% year on year. That's unheard of in Malaysia. Really unheard of. And we salivate when we look at this, but at the same time, know the nuances of investing in different countries where they practice different governance, different corporate structures, and be aware and how to protect yourself. What happens if you had invested, you were IPO investor of Ant Financial, you'll be left holding a very expensive piece of paper. So I think greed is always something that a lot of humans find it a struggle to overcome. And I think by setting certain rules to protect yourself, right portfolio allocation, so that you don't miss out on the ride, but at the same time, if it goes south, then you have the right portfolio allocation to protect your portfolio.
Yeah, I know. That's why I use the phrase dip your feet, right? It's not
toe touching, not submerged until knee deep, kind of thing.
Yeah, correct.
Yeah.
So I think let's move on to the next topic. Yes, one more thing as well, guys. If you have like a stock research report and you want us to give you a free review, just send it to this email here, right, in the screen. And we'll actually give you a free review. And if you're really good, we might even add you into our research team. Okay, now we talk about Bursa Malaysia. Not just the market in general, but the actual stock. For those of you who don't know, Bursa Malaysia is actually listed on Bursa Malaysia. So on the 28th of July, if you look at the slides here, basically the second quarter results came out. And it's actually pretty positive, right, John?
Yeah, it is.
But if you look at my screen right here, if you look at the share price has been falling. Like, it's down, from 9 something to now 769, right? So this is interesting. Fundamentals have been doing well, but the price is dropping. So why is this happening, John?
I think it's really perception again. And in the next topic, we're going to talk about, the political, how would I put it? Political
problems. Okay, let's just
say problem or drama.
Yeah, drama. Yep.
Drama that we have in Malaysia. And I think, I was just looking at the rough yields, right? If I'm not mistaken, dividend yields is about 5% at this price,
It's like 14 times earnings right now, something
yeah,
like that.
14 times earnings is insane for the only allowed stock exchange in Malaysia. So talk about a moat.
Yep.
Talk about a moat. The results have been stellar, for the lack of a better word. Everything is up. I think their trading revenue is up by a certain percentage, 40 over percent. They are 41%. The listing and issuer services revenue up by 43%. That means more and more companies are getting IPO'd, right? Then Bursa can get this kind of revenues. Depository services, everything is up virtually. And I think the underlying reason we see is actually related to our population and the demographics of it, MJ. Because we as a nation at 32 million right now, we are growing at about 0.4%. It used to be roughly about 1.1, 1.2%. Non-citizens, okay, officially has 3 million. I don't know whether they are allowed to open stockbroking accounts, right? But what's interesting is the median age right now for Malaysians are 28.9 years, so roughly about 30 years old. Why is that important? Because that makes up the biggest cohort today. At 22.8 million, right? They are going to come into what we call peak income very, very soon, between the next 5 to 6 years. And when they come into peak income, that's where they start thinking about, investing, growing their wealth, participation into the stock market. And in the past, there was what we call a lost generation. A lost generation because, MJ, how old were you in 1997?
3, I think.
3. I was doing my lower 6. I took my SPM in 96. So that was the year when Malaysia was called the Asian Tiger. 96, 95, 96, Asian Tiger. GDP was growing at an insane rate. But that was also when 97 happened and the Asian financial crisis actually happened. And a lot of people lost their pants. A lot of people actually exited the market, and we've seen a dwindling of retail participation. SC just, I think your parents, your dad probably would have told you stories about, people committing suicide, people going into long debts. 2008 was actually one of the lowest retail participation years, according to this graph from CLSA. But what's interesting is that 2020 saw a re-emergence.
Correct.
2020 saw a re-emergence, and the correlation is that this cohort that I mentioned earlier about this 15 to 65-year-olds coming into peak income, they are coming into the market. But where I feel it has to be very cautious is because it's like you're driving and you don't have a license. They probably have a P license or probably an L license, but then they also probably come in hopefully with better insights and better knowledge and understanding on the market before they invest. Because it's not just about the trading where a lot of people get burned if they don't know what they're doing, but it's also about not trying to be rich quick. I think that's where anywhere in the market, don't talk about Malaysia, US market was. We've got Robin Hood and the GameStop saga, right? I mean, as a millennial, what are your comments, MJ?
Well,
people coming to age in this.
I think that the first thing to understand is that the group that you mentioned, 29 years old, this is the millennial generation, my generation.
Yeah. And
it is going to be the largest. In fact, in Malaysia, it is definitely the largest. And if I'm not mistaken, it is larger. The generation is larger compared to like other countries. Like, for example, China is not. It's really poor because of the one-child policy.
Policy, yes.
By Malaysia, no such policy, right? You can have as many babies as you want. So it's going to have a huge impact because one, not only is the generation the biggest generation in Malaysian history, it's also going to be inheriting money from the richest generation in Malaysian history, which is the baby boomers, which is the second largest.
Yeah.
Second very good largest group. So you can see from 1993 to 1999, that's when the baby boomers came of age. If that typical baby boomers, say, 60 this year, right?
Yeah.
1993 was 25, 20, almost 30 years ago. So that was when they were in their mid-30s or in their 30s. So that's where they achieved what we call peak income.
Yeah.
Right? Which is the word you were using. Some people use the word prime income, basically mean the same thing. So that's exactly what we are seeing. And I'm excited for Bursa Malaysia because now people will be more interested in the stock market. Millennials, you say average age 29. If you are 29, it means on average you have like 5 to 6 years of working experience. So this is when people are starting to take off. going from lower sort of entry-level jobs into middle management or even CEOs, or maybe they're 29, they've been at a comfy corporate job, they quit their jobs and they start a company, and all these things will be happening, right? Then you've got the internet, so a lot of opportunities. Even when the opportunity to invest overseas has become more apparent. So, in the past, in the 90s, people didn't have that option, right? They could only invest in Malaysia. But now, even though they can invest overseas, I do think I'm very positive about Bursa Malaysia when it comes to retail participation. The only thing is that I do feel that companies need to be more IR friendly, so they need to be on YouTube more, they need to be on StockBit more, they need to communicate with their, potential shareholders or shareholders more, and that way, we can have a lot more vibrancy in the market, because SC and Bursa Malaysia has already done a good job in terms of maintaining the regulation. Now it's time for the market to actually take off.
Excellent point. I think probably I will end with this slide that I have here on the electronic trading that you mentioned earlier, MJ. Even those guys in the baby boomers or generation, more and more they are placing their trades electronically. This is according to a Securities Commission report they just released for 2020. 82% trades are being traded electronically. Those younger, obviously, I think they've never even experienced calling a broker before, MJ. Everything.
What is a broker?
What is a broker? What is a remiser? They place 94% of them place their trades electronically. And you mentioned earlier about access to international markets. I mean, when I first started off investing, there were only a few selected or licensed entities that you could actually invest into the US market. It was very, very expensive. And today you have guys like Interactive Brokers, you have guys like Think or Swim, all those what we call very low cost brokers, or is there a word for it? Those guys like Robin Hood and all that.
I'm sure there is.
It just left me. So I think the friction has come down by quite a bit, and I think it's good to create this kind of frictionless experience for a lot of retail investors to get their hands into growth of the market itself. I still feel, I think both you and I agree that we started this channel to upskill a lot of retail investors because we've seen too many people get burned. People get so hung up with the hype when they start comparing their peers. Oh, I made this amount of money, but that's not the full picture. I think retail investors should be aware of that most people only share what they have made or done well, but they don't share it as a portfolio and what were the learnings and lessons from their failures as well. I think that's where retail investors should really upskill themselves, regardless of whether you're starting off with stash away, whether you're starting off with property. I think investing is a lifelong journey, lifelong learning experience, and I think that's where we hope for the Malaysian market to actually catch up with a much more what we call developed financial markets in the world.
Yep. Well said. All right. Now we go on to the next juicy question, or rather topic. Before we move on, if you're enjoying the video so far, please give the video a like so that it can boost our videos in the algorithm so that more people can watch the kind of content we produce. And of course, subscribe, leave us a comment, click on the notification bell so that you know when new videos are out for you. Okay, John, finally we talk about, everyone's... I think this is something everyone likes to talk about, which is politics. And actually we don't, because we don't think we have anything special to give the public in terms of political analysis, what's going to happen, will Muhyiddin still be PM, what happened to Parliament and things like that. But we do want to talk about how you can position your portfolio.
That's right.
Right, in the midst of certain crises. And before I go on to let you explain to all of us what is exactly happening, I just want to show you in the next slide about foreign shareholding. I think people are very worried about all these political developments because that's where foreigners start to sell. And so if foreigners start to sell, that means the market will not have support and it will not have vibrancy, and so then it keeps falling. So as you can see on the chart here by CIMB, January 2007 was when it was at a high. 27% of it is foreign shareholders, and then it dropped in 2008 for obvious reasons. There was the crash, and then it went back up, and then oil price fell in 2014, so it started to drop again.
Yeah.
And then it started to go up again. Then in March 2018, right, we all know what happened or what, transpired. The BN government lost, so then it fell from 24% to 2008 levels, basically.
Yeah. Almost 2008 levels.
Yes, but you see, here's where the interesting chart is. The interesting thing about the chart is that actually, I know it looks like it gyrates a lot, but you have to remember it's just oscillating between 25 to 20%.
Yeah.
Right? So, yeah, I know. I guess before we go on, right, like, what is actually happening in the parliament right now? Like, and why is it causing so much stress and worry?
We use words like drama and problem, right?
Yep,
I think Southern China Morning Post was even more blunt. They actually call it a crisis.
Yeah.
So I think you guys can read a lot of the facts, but for context purposes, what happened was that there was an emergency declaration, I think declared a few months ago, and it was a reason why the government wanted to use the emergency declaration to help control COVID numbers. Obviously, it's not really worked out, and there have been calls for a parliament resitting, and the due date was on the 1st of August. So in the rush to get everything up and running, there was a decree to revoke the emergency order, and it was done in much of a haste that the king was not happy. Parliament went ahead, revoked the order, and the king actually issued a letter saying that he was actually upset with the manner in which it's handled. And there have been calls to get the prime minister to actually resign. And now there's actually the PM stepping in and postpones parliament sitting because of this.
Wow.
Yeah, so quite a bit of it sounds it mimics that of Korean drama, and there's a lot of plots. I think as an investor, I mean we're not political analysts. I'm just trying to narrate the events so that the people understand the context of things. But I like it that you brought up the point about this gyration, because when you were explaining it and showing points of the graph, right, MJ? What I was thinking I was thinking, there's this kind of balloon that you put a weight underneath a toy balloon, inflatable balloon, and then when you punch it, it always comes back up. You remember those kind of toys?
Is it the one you put underwater? Then
you put underwater underneath,
right,
and then you punch the balloon, and it just bounce back up.
Yeah.
Bounce it, you punch it, it bounce back. That was the image that was going through my head. So in any country that wants economic progress, and I'm very sure, regardless of political affiliation, any one of these parties that are in control, they want economic stimulus, and they want economic growth, because that's how they can fund the government to keep it going. No government of the day, there may be some hiccups here and there, but no government of the day wants decline in economic growth year on year.
Yeah.
Even no matter how corrupt the government is, and we're not here to say who is more corrupt. That's not our role. But the point I'm trying to make is this: it is detrimental to any government today to want to have economic stagflation or even decline. And while they are sorting out whatever crisis or drama that they have today, I'm pretty confident that economy will bounce back. Similar to that balloon and the ball that I was talking about. And you've evidently pointed out historically all these political events that have transpired. I don't foresee them doing things like China, like what we talked earlier about. Straight away they implement a rule where educations are straight away non-profit. I don't see them doing that. I mean, from past experiences, I don't see them coming out to say, okay, Nestle, since you're a foreign entity, we force you to have 100% ownership, Malaysian ownership. You know, I mean, they've done things like, you know, even allow our national car to be, you know, primarily Chinese owned today. So I feel it's not that bad. And, you know, once we look past the drama of this political upheaval, when we look past the foreign shareholders leaving, the moment they see something of certainty, right, they'll come back in droves. From my point of view, what are your thoughts, MJ?
Well, I think the first thing to understand is that 70% or more than 70% of Malaysian stocks are in what we call the small cap sector. So small cap defined by 750 million market cap and below. And in this area are where all the big returns are.
Yeah.
So you're talking about, you know, some of you have been following the market, stocks like Genetech, Vitrox, QL Resources, SKP Resources, MyEG, all these
QL
companies
before it became big cap lah. I think that's where you're coming from.
Before it had the success yet. Today, all these I'm mentioning are success stories, right?
Yeah.
And all these were once small caps. And how is this relevant to foreign shareholding is that, you see, foreign shareholders are usually things like pension funds, big mutual funds, or BlackRocks, or Fidelity, and all that.
The CalPERS of this world lah.
Yeah, the big, right? And so what happens is that these big guys, they have too much money, and that means that for them to invest in all these smaller companies, let's say like sub 100 million, sub 200, 300, 500 million market cap, is going to be a bit difficult for them. And so what I'm trying to say is that whatever foreign shareholders do is completely irrelevant to you as a Malaysian shareholder, because all the opportunities are in the companies that foreign shareholders tend to not invest in.
Yeah.
So it completely doesn't matter. And besides, you get the chance to be earlier than foreign shareholders. What you want is a situation where you buy 2 to 3 years before a foreign shareholder. And by the time a foreign shareholder, guess what? You're selling your shares to the foreign shareholder.
Correct. You know, it reminds me of, remember the Dato' Chia Cheng Hai, Value Partners?
Yes, that's right.
Yeah, I remember I don't know whether you remember the interview he gave to the Star, and he talked about BYD. So he was in early. He understood the business really well. And then when he was selling, that's when Warren Buffett was buying. So he was actually offloading the Berkshire Hathaway. And it also, what also triggered my thoughts was on Friday, actually, I hosted with on StockBeat with Savvy Investments with Mengtek, Hibiscus. And Dr. Kenneth Pereira was saying they are below the radar of these institutional and foreign funds because they're a sub $250 million US market cap company.
Correct.
Even though they are net cash oil and gas exploration. Not many by the way, for reference, not many companies in the world doing oil and gas exploration are actually in a net cash position. Yeah, and you know it tends to take a beating lah. Their valuations, their earnings multiple, premiums and all that, and that's the struggle. And you rightly pointed out that they have mandates. A lot of people don't understand that these foreign institutions actually have a lot of mandates. Minimum free float so that they can exit. Minimum market cap so that it's sizable enough for them to put even a 1% allocation. And I think focusing on the right statistics is much better than say, oh, foreign shareholders are leaving. That's the doom. That's the doom of the Malaysian market.
I think the problem is that people associate foreign shareholding or institutional shareholdings, for that matter, as smart money.
Yeah,
that's what they think. And in one sense, it's kind of true, because once big shareholders start to come in, then more interest is garnered from the market, and so people start to flood in, and that's where the share price goes up, right? Basic demand and supply. But ultimately, big shareholders have to come in only when things are certain and when the fundamentals are 100% or close to 100% proven.
Correct.
And that's where the opportunity is. You get to figure out companies that can be fundamentally sound way before institutional fund manager. Even if the institutional fund manager knows about the stock, knows it's great, you kind of have to wait for it to... It's weird. You kind of have to wait for the price to increase, only he can buy.
You can buy it at the hatchling for us, retail investors. They have to buy it when it's like almost reaching, full-size
because
chicken.
a big chicken, yeah.
Yeah.
So it's a weird thing. That's why I never understood why people kept saying that institutions and all these big funds are smart money, when actually the smart money should be in the retail, right?
Correct.
So yeah, I think do you have anything more else to add?
No. I think you summed it up pretty nicely, and I think it's about a mindset shift lah. A lot of people are looking at parameters where it's the herd mentality, and this is what people tell you. But I think, as I've mentioned this many times, you need to look deeper lah. Really need just to take one step deeper and to understand the logic and common sense behind all this. Yeah,
absolutely. All right, guys. Hope you enjoyed this week's quick dive. See you next week. While you're at it, come watch some of our other quick dives here.